Hey traders, stay tuned for a sector review for the week ending 11/17. All right, so what we're looking at here is an aggregate of a lot of the sectors. So you have all these stickers in the back. I have the XLF, XLY, XLV, XLB, XLI, XLC, etc., XLE. So let's evaluate how they've done as a group. Great rally, but one thing to note is that the S&P has already recovered its entire correction from October, and these guys are short, so they need a couple percent in aggregate. So now the work from here, where we are, to up here is, I can't give you a number because it's not a stock, it's a bunch of them. Let's call it 2.5%. So the next 2.5% is going to be labored hard, and once they hit 2.5%, they're going to hit a wall. That is a place they wanted to hold. That was a wall before and a wall before that. Are you seeing this? This is August 2022, and this is the February fail of this year. Finally took it out, confirmed it, lost it, couldn't come and get it back, and here we are. We would be going into it. Okay, so be scalpy. All right, so let's go with the XLF, which is a lot of the concern is in the banks. They've done well. They have recovered their October dip, and let's see if they can, a little bit more upside would be constructive to tackle the September dip. It could withstand to drop a little bit, but not a lot. So 33.50. So if I'm long banks, I could stay long banks. Okay, so that's one. The XLI, the industrials, not quite there. So they're lagging. They might have some headline issues. So let's see if we can go shorter time frame. There is progress. And if they can hold 101.5, maybe 101, they would be able to claim the victory over this one and tackle this one, which is at 104. So they look like they're on their way to 104. Whether they make a dip into 101, I'm not sure about that. We will find out afterwards. One to pay attention to like the SMHs, anything that has technology specifically centered around chips, because NVIDIA reports soon, and it may have a lot to do with the whole market, in fact. So this is the SMH busting out, okay? So again, it could withstand to drop a little bit and still be busting out, and now the bears are up against the wall. If the bears don't stop them this week, this guy could run another, you can get to 172 from here with a lot of resistance, so that's another 8%, but that's a lot of resistance. And if we get to that number of 172, that means we triggered another breakout. So this is tag teaming bulls of sorts, okay? I don't know if I had lines here. Let me zoom back out to 1 minute. You see how the flag here, whatever you want to call, oh, they must have split or something. Look at all these lines up there. Okay, yes, they did. I didn't even know that. Interesting. So all my lines are gone. So you take that out, you have at least that much of upside, at least. That's 41 points. So this is doable, 200. Imagine. So, Mr. Bear, you better bring down NVIDIA on its earnings, all right? And the XLE is always a hot one to talk about. This is a harmonic pattern which has retraced, not quite two targets, almost, but if you look left, it's going into a pretty pivotal zone. Whether it's exactly the bottom or not, I know that there are buyers lined up into 81 for the XLE. Now, if you don't know this, the XLE is heavily weighted for two stocks, Chevron and Exxon. They make up like 44% of it last time I checked. Now, the bad news, once they lost 84, I can argue for the fact that they need to get to 77. So I think they will bounce, and I think they will curl, and I think there's a good chance that they will end up down in this zone, which is centered around 78. I would not be chasing these. No Chevron, no Exxon. If you wanted to see individually what the Chevron looks like, you see what's going on. Every arrow I drew has been flawless. That was a target. They just hit that. They bounced off of it and then made a lower low. So that is a target. And that was generous on my part. The risk part is way lower than here, but let's say support is going to hold. So Chevron has 141, needs to hold 140. If not, it goes to this one, and that is a buyable dip right there. Buy the dip opportunity. That's months, weeks, months. It's been there. So I'm not picking the covering Chevron right now because that is part of the XLE, and I know it's something important. Now, we just got away with one on XBI. We went long, we bounced, and then we dropped, and we expired perfectly on Friday. So I could repeat that. So I could repeat the XBI trade with a little bit of caution, but lower. So I think I'm going to do that Monday or Tuesday myself. Now, I want to warn you that if the XBI loses 64, straight to 62, that's the last ditch, but I think the downside would be much lower. Now, I don't see why that needs to happen, but 54 or 55 could be the next stopping point. Now, on the way up, it's going to struggle to break out of 72, where the catalyst lies. That's putting a lot of faith in that. But this is the kind of stock bunch that could do it. So I would imagine that if the stock market in general doesn't fall apart, this is an opportunity. And the opportunity would be to get long where we're at by selling a put spread and then adding some sort of a call spread once we see some constructive price action. Okay, so that's the eventual trade, but it starts now. So I'm going to give it from here to here. I don't always give it full credit. Okay, and if I look left, perfect, right there. Okay, now job one, don't make a lower low, must hold. They do have a backup here. So the alternative route, so this is one way it could do it, but let's say the market's hiccup and this one does one of these, it could end up in the same spot after a dip. Okay, so that's two paths. I don't know which one works, but the credit put spread could cover both. Okay, so back to our mothership, we're going to look at the XLY. Very similar to the whole bunch. You know, the XLY, if it continues green this week off of over 163, you might be able to overcome these and go to the target, which would be in the high 60s, which is 70 basically. So XLB is probably one that I would think it would struggle. Materials, I don't know how heavy it is for real estate or not, but you can see how hesitant it is. It has sellers above and buyers below. It's kind of like there's nothing to be done here except wait to see which way they want to go. I could argue that maybe the buyers are better consolidated and the sellers are pointy. So this is not a real commitment, although it's a really sharp area. But if you take it out, you can get up to here. So all of these indices have upside potential. But the first premise is you need to hold the greens that we just got. Okay, so I think you know, the XLK maybe we covered, but if we covered the SMH, it's kind of the same story. All these big box techie companies have gone to the moon. So the XLY, similar story where you have an opportunity, but it looks pretty sharp. And you also have a base, although this base is a little bit further lower. So here I can argue both sides. On the XLY, the consumer discretionary, 158, lose 158, you will get to 154 pretty quickly, or 154 and a half. And of course, conversely, if you take out 163, where my cursor is, you might end up here with one last selling zone at 164. So 63, 64, 163, 164, super important here on the XLY. That's the consumer discretionary. Who did I leave out? I think that's it. The XLV is similar to the the XBI. So maybe the the XLP. Okay. The staples, which is like Coke, Pepsi. Remember, they couldn't buy a bid not too long ago. It's like, what's going on with Pepsi? What's going on with Coca-Cola? Well, they are bouncing. Now, they could fall. They have a good base around 67, 68. I like that. And they have a breakout opportunity from 69.50 and 70. You take out 70, you have a hiccup at 70.6 and a hiccup at 71 and 72. You get it? But it is a breakout nonetheless, and the upside potential is probably about 250. So conservatively, 250. So that puts us in this zone of 72, give or take 50 cents. So higher lows, higher highs. Are we hiding in a higher low, higher high transaction here? And if so, then they are buying dips. I think they will try to buy it at 68 and 67.50. So if it comes down there, it's tradable. I'm going to put an alert. It's tradable for a curl back. Meanwhile, this is an opportunity to get us up to here. So I think they go up in that ascending channel. All right, this is probably a little bit longer than I wanted, but I didn't want to leave you hanging. This is the sector coverage. If I missed one, or if there's one that you want me to add, message me in the notes section. We will add it the next time.